Hey everybody, this is Jim at SP500chart.com. It's actually about 6:30 on November 7th, 2013. I got in a little sooner than I thought, so let me read this to you and we'll get right to it. The website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. And that was a rather amateurish call yesterday. But you know something? I think 99 times out of 99, I'd have to call it because that's what it looked like. But we got a rude awakening today. Let's take a look. Okay, starting out here on a 15-minute chart. Yesterday, it looked like we had broken up, or were at least in the process of breaking out of this very small inverted head and shoulders looking pattern, which didn't break out by a technically significant margin, but it did get up over that, came back for a back test, and then went sideways a bit. And then what happened? Well, we got an initial surge this morning, and I was on the road, but I didn't leave until just a few minutes after the market opened, and I'm thinking, all right, you made a great call. And then I stopped for lunch, and the market is down pretty good. And then I drive a little longer, and it's down more, and I just keep going, oh well. So, oh well. This is the blue line that is drawn over the last few tops. You can see it right there. And we are a little bit underneath that line. But as something of a very small caveat, I need to remind you that we have three peaks, 1, 2, and 3. If we draw this line over the last two, we are slightly underneath it. Okay? If we were to take this line and say that's the correct point, then we're not there yet. If we line up the first 2 points. If we take the first one and the third one and line them up, we are right at that line. So that's just to kind of point out that sometimes there are little vagaries in doing this. Another thing happened today. By the way, if we take this line out in earnest, then the next support I show would be one of 2 places. Look at all that mess. I need to clean this up. I think our rising turquoise line could give us a bounce. This gray line down here could give us a bounce, but that's at about 1700, so that would mean we've got a little bit further to go. But I'm not quite ready to call that yet, and here's why. Because as we look over the last 1, 2, 3, 4, 5, 6, 7 days, you see that we had this little descending pattern. We broke out, back tested it, got up a little higher. Could this just be another back test? And could this be happening close enough to this blue line that's drawn roughly over the last 3 tops, that if that serves as support, maybe we bounce. Maybe this was just something of a back test of this little pattern right here, and because this has changed the chart to the point to where this, what I thought was going to be an inverted head and shoulders over here, that's blown out of the water now. And the reason it's blown out of the water is because we are now underneath this head. So with that in mind, I'm going to erase my little highlight thing here. I'm going to erase this neckline. And what I'm going to do instead is I'm going to look at this top, and I'm going to look at these two tops right here. And by the way, we can get rid of that target. So what I'm going to do is I'm going to draw a nearly horizontal line right here, because this goes over the highs that were set on the 29th and 30th, basically right. I can't tell if the high was actually on the 30th or the 29th, but that's right at about 1775. And then 1775 was where we got turned back today. So I'm going to extend this line out here as an important resistance area, and maybe, I'm not saying yes yet because I don't know, but maybe we are forming something that's going to go out to the sideways, and if we can get over 1775, then this rally could continue. But today's pretty ugly. Finally, there's one other line I want to throw down on this chart that could be significant too, and that is, by the way, let me just, while I'm talking, I'm going to clean up some of these things just to make this a bit easier to read. We don't need these little things that we're looking at on the 1 minute chart. But if you look at a couple of little bottoms that have been in the S&P lately, you'll notice there's some things that line up here as well. We've got 1, 2, 3, 4. We almost bounced there today, came up, then broke through that. All of that to say is that if this is if this does work out as an ascending triangle, and we don't know yet because, well, we just don't know. But if this acts like an ascending triangle that's broken down to the downside, then we would measure the downside target from that would be the height of this pattern from the first reaction. That would be where we first came up and then came back down to touch this bottom support line. You measure from that first turn, and if this is what's happening, then this pattern would be pointing us to about 1734 and change. But I think the jury's still out on that. I would like to see if we maybe get a bounce right about where we are here, and if we can, and work our way back up, because like I said, this is about 1760, we're at 1747. That's that's still not 1%. So there's a possibility that we could regain this this lost ground here and reach up back to this 1775 area. But right now, I think 1775 has proven itself to be the next area of resistance that needs to be cracked in order for the S&P to power on up to another level. And let's just see if maybe we extend out to the right a little bit more, and maybe we get a bounce tomorrow and start to work our way back into this range that's roughly between, let's say, 1745 and 1775. Maybe this is support and this is resistance, and we're going to be bound between these two lines for a while. If we continue to sell and take out this line right here, then I'm thinking that would probably mean that this is acting like a reversal pattern, what took place over the past two plus weeks. And then I would look for a move down to at least this turquoise line down here. So in other words, I feel, and this is guesswork, it's all guesswork, but I feel like either we got to bounce really soon, or we're going to be tagging some support lines down here in the near future. So guys, that's the video for November 7th, 2013. You can see, really, it's interesting. It was a fairly controlled day, and actually, as you look at it too, you could draw some little trend lines on this chart and say, well, Jim, doesn't that look a little wedgy? Well, maybe it does. Maybe that's a sign that that selling interest is beginning to wane a bit. So let's see if maybe we get a bounce, and if we can get back up and we stay between 1750 and 1775 for a bit. That would give the market a chance to consolidate, maybe change a little, just a little changeover, a little weak hand selling into a little stronger hands, and then we could mount another attack on 1775. So guys, there's your video. Thanks for watching. I'm glad I was able to get this out a little bit sooner than I thought. Let's see what the market surprises us with tomorrow. But for right now, I'm chalking one up over in the bonehead column. But I'll be honest with you, looking at the chart as it appeared yesterday, I would be a bonehead 99 times out of 99. Because that's just what it looked like. And you got to call it what it looks like. So anyway, thanks again. Take care.